Hey everyone, and welcome back to Mehmi Financial Group, where we make complex financing clear for Canadian small to medium businesses. I'm your host, John Mehmi, and today we're tackling a big challenge securing truck financing in Brampton for long haul operators. If you run a trucking fleet and need to upgrade or expand, stick around. I've got real market insights and practical steps that you can use right now. Let's start with what's happening in Brampton's long haul trucking scene. So there's revenue pressures. So nationally, long distance trucking revenues dipped slightly in recent years, even though niche freight demand, like refrigerated and oversized loads, remains strong. In Brampton, tight profit margins and rising equipment costs, meaning every financing decision counts. Moreover, supply chain shifts. So there's been real disruptions, having pushed many shippers onto trucks, driving up spot rates, but also speeding up lead times and pressure on operators to get rigs on the road faster. There's also been modernization drive. New fuel-efficient Class 8 tractors aren't just a nice to have. With the diesel volatility, upgrading to newer models can cut fuel spend by 10 to 15% and lower maintenance costs. The takeaway, financing isn't just about cash flow. It's your tool to stay competitive, control costs, and secure capacity when demands spike. So step number 1, define your truck specs and budget. Before you reach out to lenders, get clear on what exactly do you need. So, you want to make sure you choose the right make and model. Are you looking for a 2024 Volvo VNL, an International T, or a reliable used workhorse? New rigs offer promotional deals. Used units may qualify for lower rates if your credit is strong. You want to estimate your annual mileage. Long haul trucks often rack up 160 to 200,000 kilometers per year. Factor in route cycles, border delays, and seasonal seasonality. Calculate your total cost of ownership, your TCO, beyond the truck's sticker price. Model fuel at $1.50 to $1.70 per liter. Routine maintenance, about 8% of a purchase price per year. Insurance and downtime impacts. Set your financing target. Decide on a down payment. Industry norms range from 5 to 30%, though qualified borrowers can access 100% financing through some OEM programs. Choose a term length, whether that's 48 to 72 months. Longer terms reduce payments but increase total interest. So, here's an example. Jim at Maple Express wanted two new Volvos. He chose a 10% down payment, a 60-month term, and ran the numbers to keep monthly payments under $2,500 per truck. Now it's crucial when margins are thin. Step number 2, target the right financing partners. Now, not all lenders serve long haul fleets equally. Here's how to match your needs. OEM captive programs. Brands like Volvo or International often offer promotional rates, sometimes 0% for 90 days or 2.9% APR, plus deferred payments. If you qualify, these deals can beat traditional loans. Your other option is major banks and credit unions. You can expect somewhere between 5 to 8% APR and about 7 to 10 days for decisions. Local branches in Brampton can give you relationship leverage if you banked there for more than a couple of years. Now there's also specialty truck lenders. These finance companies approve in 2 to 5 business days and work with high mileage or modest credit profiles, though rates run between 8 to 15% APR. And then there's brokers and aggregators. A broker like Mehmi Financial Group shops 30 plus lenders for you with one application, multiple quotes, no extra forms. Brokers often negotiate lower fees or waived application charges. Now here's an insider tip. When rail spot rates jumped last winter, many operators needed rigs fast. Jim used a broker and locked in a 3-day approval at 9.5% APR versus the bank's 2 weeks timeline. Now, step number three, craft a high impact application. A polished application and timely follow up are fast for your truck to approval. Now, you want to build one neat PDF packet with pro forma invoice or equipment quote. Last 6 months of bank statements and 2 years of financial statements. You want to make sure the business is registered and have CVRO abstract for Ontario operations. You want to also write a concise cover letter explaining we are financing, for example, two 2024 Volvo VNL 860 tractors for cross-border freight. Each will average 180,000 kilometers per year. We anticipate a 4% net margin increase upon upgrade. Now, you also want to set your timeline in that same email. Can I expect a pre-approval within 48 hours? Then you want to follow up in 24 hours. A quick call or email confirms they received everything and shows you are serious. Let's wrap up what you can apply right away. Strategic financing locks in capacity, controls fuel costs, and sidesteps lengthy delivery waits. Spec and budget analysis prevents over or under borrowing. Run that TCO before you apply. Lender match matters. OEM deals for speed, banks for cost, specialty lenders for flexibility, brokers for convenience. Application polish. A clear cover letter and a one file PDF often earns you priority processing. If you like our free long haul truck financing checklist or personalized support in Brampton, head to mehmigroup.com. Our team at Mehmi Financial Group has helped dozens of Ontario fleets get on the road with fast, tailored financing. If this episode gave you any new insight, please subscribe, leave a comment, or share your financing challenge. Thanks for listening.